First way of buying real estate, right? For the example of you don't have to go to a bank. See, with banks, right, they're the ones that control the terms of every single agreement. They're the ones that control what the interest rates are on loans. They're the ones that control how much money you need down, what you need to personally guarantee, if there's any collateral, the amortization schedule, you name it. They control everything. So if you take them out of the picture, we significantly simplify.
Hello everyone and welcome to Elevate Through Real Estate YouTube channel. I am honored to be here with Zach Beach, wicked smart coach. How are you, man?
I'm awesome.
Awesome.
We're having some fun today.
We're having some fun. We're talking about how to buy real estate with no banks and no credit. So I know you guys will be listening intently because entering the market that we're in right now is like, man, like these interest rates, things won't cap.
My true belief is that right now, if you don't master creative financing, or at least one of the strategies that we're gonna teach you throughout this process, if you don't master at least one of them, you're gonna be left behind. With exactly what you're talking about, interest rates rising for buyers, sellers that have unrealistic expectations. I was just on Zillow the other day. I haven't seen as many 30, 60, 90, 120 days now on market. You got people that are in pre-foreclosure. They're still getting hit from the COVID market and so much more. And that's why as we go through buying and selling on terms or buying and selling real estate through creative financing, these nuggets are things you can go ahead and implement in your business right now, whether you're just getting started in real estate, great place to start. That's exactly where I started. Or if you're currently buying and selling real estate right now or an agent, it's a great additional tools here.
Absolutely. And I mean, to kind of backtrack on this, well, first we'll start with what is creative financing? Because some people are like, what is this? Like, are we buying without a bank or credit? Like, what is this actually? So Zach, fill us in, like, what's kind of the definition of it in your terms?
Yeah, so creative financing in itself are really no banks, no large down payments, and no personally guaranteeing debt. See, the reason why my family and I are involved in this particular niche is back in the day, my partner and my father-in-law got crushed in 2008. So he did fix and flips, raise roof projects, was a broker, sold it to Coldwell Banker. But when 2008 hit, he went ahead and had 23 projects that he was working on, and they all went down to a third. So as you can imagine, he got absolutely crushed. So the only way that he could get back into real estate was to look for new rules, for a new way to get involved in real estate investing. And that's why he seeked out a bunch of mentors and started working in this creative financing space. And then I did the exact same thing when I was a bartender and personal trainer. I didn't have money. I didn't have the credit. I didn't have the ability to go out and buy a bunch of real estate. And maybe you're watching this YouTube channel and you're in the exact same spot. Well, it's a great place to start. But most importantly, it's also a really risk-averse way of buying real estate, right? For the example of you don't have to go to a bank. See, with banks, right, they're the ones that control the terms of every single agreement. They're the ones that control what the interest rates are on loans. They're the ones that control how much money you need down, what you need to personally guarantee, if there's any collateral, the amortization schedule, you name it. They control everything. So if you take them out of the picture, we significantly simplify the real estate transaction. But most importantly, you now can create good deals for you as a real estate investor. And then, of course, no large down payments. At first, all of these creative financing things were a necessity, and now it's a choice. Now it's every single time I speak with a seller, even if I have money to put on a down payment, I'm now limiting myself because it's an opportunity cost every single time I put down money in the property. Right. So no large down payments. And then, of course, nobody wants a personally guaranteed debt. Right now, with the transition of the market, the safest way to buy real estate is through creative financing, because if anything were to happen dramatically in this current market, which we're seeing, turmoil, and we're also seeing, transition, nobody's ever going to know that I'm the one that owns that real estate because I never personally guaranteed that. Most importantly, no bank is ever going to come knocking on my door because I didn't personally guarantee the debt. And we'll share with you exactly how to do this, build out your portfolio.
Heck yeah. And I mean, this also works for a lot of individuals who don't, like, you're unbankable, right? Mm-hmm. Like, you have plenty of cash, but like you're self-employed. Like, what are some of the scenarios that this could be like a serious win-win, Zach.
But yeah, so if I look at it let's just look at it from like, say, a buyer's perspective. Buyers right now in the market, so I'm looking at like somebody that actually wants to go and live in the property. We have buyers that are self-employed. You have people that had legitimate hiccups in their credit. You have people that had a job change, industry change. Banks want to see seasoning. They want to see that you've been in a job or a bank or a industry for a long period of time. And especially if you're self-employed, I mean, you got to check your bank statements. You have to go through 24 months of seasoning. But then also, let's talk about just right now in today's market, how relevant it is that a buyer, right? You're in the agent side. A buyer that could qualify for a loan at 3% now cannot qualify for a loan at 6%, and now we're approaching 7.5%. So these are buyers that their debt-to-income ratio just doesn't fit anymore. Right. So now they're on the sidelines. Yeah. And the great thing about this, so when we dive further and further into creative financing, the buyers in which we work with, we're looking for buyers, even though you're going to hear things like rent-to-own program and owner financing. These are people that are interested in becoming a homeowner. They just don't have the ability to be bankable right now. And that's where you come into play when it comes to creative financing, is you can create that pathway to homeownership.
1,000%. And also, too, I don't know if I shared this with you, Zach, but my father, when he purchased his restaurant and then eventually purchased the real estate, the landlord, like my dad had only been in the U.S. for about 4 years. So he didn't have the credit history to buy the commercial property that, you know, his business was in. He had the hustle, he had the cash flow, he had the income to make it happen, but no bank would give him that kind of credit, right? So like, he was able to, through seller financing, the landlord didn't own the property. Oh, nice. So that's how he actually bought his first property, and which is now paid off. And it's awesome, right? But like, that enables you to move so much further ahead, you know, and achieve the American dream of ownership, whether it be for your business or whether it be for, you know, for residential. So it's really, really cool, guys. I mean, like, this stuff really opens doors. And I think it's very important for everyone to note that. And especially you touch on something super important. 3% and now it's 6%. And when these banks look at debt to income ratio, you're not going to qualify for the loan that you once did. Like if you've qualified once for like a $500K loan, chances are now you'll probably qualify for what, like $350?
Yeah. If
that, like, and now guidelines have gotten even stricter and stricter as we've kind of gotten deeper into the market. So it's really interesting what's happening in the market.
What's interesting, Pam, is you bring up the story of your father. I think what's happened over many years is creative financing has been existing in people's plain sight. I mean, we've been doing it now for 10 years consistently. But it's been in people's plain sight, but they never put it together that was like an actual strategy that you can build a business around. So I was like, I knew this guy that bought a commercial real estate on seller financing, but you know, he just did one deal. It's just like, how's his business, right? Or I knew this one person that bought a house on rent to own, but that was just their individual, you know, property, and they were just working to become a homeowner.
Right.
It's now that creative financing is becoming, you know, mainstream. I was literally just talking to, he was originally an intern of mine about 3 or 4 years ago. And he called me today and he was like, hey, how do I work my systems? He's wholesaling. How do I work my systems in order to get enough deals? Because eventually I want to get into creative financing because that's what everyone's doing nowadays. And I was like, oh, it is. Everyone's doing it nowadays, huh? And it's just because it's becoming more and more mainstream. And that's because of two things. One is because now you actually have, we've entered into an age where coaching and where, you know, people that are investors are now openly presenting the information on YouTube and things like that, just like today. But you also have this dynamic in the market where it's now needing creative financing. Back in the, and I wasn't around, but this is what I was told. Back in the 1980s, when interest rates were normally at about 10%, rent to own and owner financing were a big thing. And then as interest rates dipped, it became less and less prevalent because the traditional financing was easier to get a hold of money. And now the market's transitioning again. So if you find yourself right now on YouTube watching this, right now is the time in order to get involved in creative financing, because we're on, you know, the front side of a wave. We're able to catch a wave right now. Like, you're in the right place at the right time with the right strategy. I literally just began making more and more seller calls as I was ramping up my business in Massachusetts, and that's because of the wave right now. You know, I've been helping out students across the country do it for about 8 years, and I was like, now is the time where I'm just opening up more LLCs to go back out there and get deals done. And I've literally been making calls for a week, and I'm not telling you this is going to be your results, but I've been making calls for a week, and we already booked a couple appointments here and already making offers. So these things can happen rather quickly, and that's just because, that's not a promise, but that's just because right now sellers are more open than ever to alternative options because they're scared about the current market. They are their properties are sitting on the houses longer. Some are behind on payments. You have tired landlords coming out of COVID right now. It's just, the list goes on. And really, I describe creative financing as almost like the water that fills the ice. It's like it fills every other offer that you can't make in every other niche. And that's how you can pull it off.
Yeah, and speaking of which, because this is one thing that I know we've presented before, and people are like, well, why would a seller be interested in creative financing? So what are a couple of the benefits that we can touch on that, like, hey, like, why would they want to do a deal with you as opposed to like just getting a bank and clearing that out?
Yeah, great question. So I'll go over maybe like 3 different reasons why, but there will be many reasons. As I was hanging out with your team yesterday, I explained to them that there's 2 things. Because, and I get it, and I get the fact that it can be hard sometimes to wrap your mind around why a seller would not want a large down payment, why a seller would give you a property without you going to a bank or not have you personally guaranteed debt. I get it. But what it really boils down to is 2 things. Number 1 is we have to really understand the motivation of the seller. And when I say motivation, I don't mean it has to be negative. There are lots of sellers out there that their motivation is they want more money. Right? They're in good financial standing, but they want more money. It's not that they're in a position where they can't afford the property anymore or they're behind on payments. No, even though that is somebody that we help, the motivation can be both positive and negative. It's just wherever that seller, why they're selling, where they want to go, and by when. That's the only thing I matters. Where, why, when. And once we understand that, then we're talking about the financials of the property. Because once I understand that a seller is open to creative, or I really understand where they want to go, and I know I can bridge the gap with it, now I just have to understand the finances on the property. Because that's where the creative financing comes into play. Now it's, okay, I need to understand what the mortgage is, what the mortgage payment is. Are they up to date on their payments, their taxes, insurance associated with it? There's any other terms that we may need to bring into play. So once we understand that, now let's talk about some key motivations on why the seller would want to sell. Well, one is they want to maximize their profits.
Yep.
I'm sitting next to a realtor, right? A broker. And I sat next to a bunch of realtors around the table yesterday. But the truth is not every seller is willing to go ahead and pay a commission. I mean, that's what you see for sale by owners.
Yeah.
So when I talk with a seller, if they don't have to pay, say, 6%, right? If they don't have to pay closing costs on the property, I'm already maximizing their profit day one because they don't have to deal with any outside challenges. And talk about all the other fees that are involved with, selling traditionally. So already we could potentially maximize their profits. And depending upon the structure of the deal, they may get cash flow over time. They may get the benefit of the principal pay down. They may even get part of a non-refundable deposit, depending on how we structure it. Yeah. So we on average, our sellers are going to probably net anywhere between 5 and 15% more. That's what we tend to see. So maximizing profits. And again, that's not always the case, but that is certainly one of them. Next one would be debt relief. Now I'm going to kind of go on the opposite side of the spectrum. There's sellers out there that are right now behind on payments, in pre-foreclosure, and they need somebody to come in and save the day. They need someone to come in and catch up their payments or pay their back taxes so that way they don't lose their house. And when you go ahead and do so, now you have the ability to go ahead and purchase a property creatively because it has to make sense for you along with the seller, and then eventually you can go ahead and sell it. And then the last one would be state or tax planning purposes. See, this is where commercial real estate comes into play, but also, somebody if they have a portfolio or their landlords, things of that sort. A state or tax planning purpose. See, we bought our corporate office. It's a mixed-use building. It's it's in a very dense area. It's known as the $1 Million Mile, right outside of Newport, Rhode Island. Mixed-use building. The seller literally had a sign in the front of the building saying like that they wanted to owner finance. And unfortunately, he told me he had like 4 or 5 realtors come to his office and still try to list the property. He was like, no, I'm trying to owner finance this deal. And here's why. he saw the benefit of owning that commercial space. He saw the income from it. But unfortunately, he was sick. And we didn't know at the time when we struck the deal. But what he really wanted for his family was to be able to receive the income from the property, but without actually the ownership or management of it. So what we ended up doing is we structured one of the deals, one of the techniques that we used, we structured one of those deals, and we have been paying their trust for about 5 years now.
Wow.
So they're always the wife and the daughter are very happy as we have consistently been making those payments, and that's something that they live off of, or at least some of their income stream. So another reason, estate or tax planning purposes.
Yeah, and also too, to add to that, they also have an opportunity to make interest off these, and be the bank, right?
Yeah,
like
100%.
when you guys look at your closing disclosures, you'll see here's the amount that you're going to pay over time. You're buying something for $300K, then all of a sudden they say, oh, by the end of 30 years, you're going to be paying $627,000. You're like, what the? Like, this is not even right. Like, what? Yeah. So as a seller over time, that you want to really maximize on your profits, it really, like, you have the opportunity to make that interest, right? So for my father, the gentleman who gave him seller financing, he made 8%. Yeah. And so my dad, by the time he was done with his property, he paid more than double what
But he had the asset, right?
Right, he had the asset.
Yep.
Yeah, so that's amazing. But like for a seller, that's a huge advantage. And not only that, but not everybody wants to go public with wanting to sell something. I've dealt with it many times. You know how many times I hear, I want off market. And even, as an investor, when I go in and purchase these deals, they're like, Pam, as long as nobody knows about it. I'm like, if you don't want anybody to know about it, sure. But like that's another huge part of it as well. So I think and then the capital gains part is also very huge. I think we talked about that yesterday, that you're not getting smacked with all of it at once if you kind of
spread over time.
Exactly. So it doesn't hit you that hard. So that kind of ties in with the estate planning purposes. So for sellers, because some people are like, why would they ever entertain such a thing? This is super important to know. So if you're a seller out there, I know you're listening. These are some of the big benefits for you. So start taking these deals in when we call you.
Yeah, exactly. Us. No, I'm just kidding. But at the end of the day, it's really about solving problems. Because there's a it's like an ecosystem when it comes to real estate, right? There's a reason why there's all these different niches. There's a reason why there's multifamilies, and that there's fix and flips, and that there's syndications, and there's wholesalers, and there's creative financing. And at the end of the day, it's all about how we can best solve, number one, the seller's problem first. Because if you can't solve a problem, you can't get a deal. That's what I always tell our students. It's just, and the sellers that I'm communicating with. It's like, I just need to understand where you're trying to go, so that way I can figure out if I can help. If I can't, then that's great. I'll refer you to somebody that can. Because we're really just solving people problems. We just happen to operate with real estate as our assets. And then once we go ahead and once we're able to solve that problem, now you can go ahead and start creating some profits. I always tell our students that the reason why you get paid so well through creative financing is because you're solving problems that most people can't or are not willing to learn how to do.
Yeah.
And it's all just about pulling on those different levers. So 100%. It's right now, I just think it's become more and more prevalent because there's just way more opportunities for creative financing.
Absolutely. And I mean, for the buyers, for real estate investors, I mean, your ability to leverage on something like this is exponential. That you're not dealing with a bank who wants your DNA sample, because that's happened to me several times. Even, like 9-figure portfolio, and they're still asking me all these ridiculous questions. I'm like, guys, like if I sold all my real estate, like I'd be like I would be like way set for life. But like, come on, like. But there's just like if there's probably underwriters watching this, I'm like, there's no common sense in like some of the bank underwriting that you see. You're like, that doesn't make any sense. Because what if that person loses their job tomorrow and you just underwrote everything here? Then they could still lose the house. So really, how are you mitigating risk? An entrepreneur is actually more solid, I think, than it is, right? So anyway, that's shots fired to underwriters out there for big banks. But
it's a good thing we're not dealing with it.
But like for the buyer, the ability to leverage is insane, and it's just like a win-win scenario for both sides. And it's like no banks, no large down payments, no credit. Like that's absolutely awesome, because then that allows you to keep expanding. And then the no personal guarantee thing. I mean, who was it, Ron LeGrand? He's the legend. the OG, and I remember him speaking, last year. What was it? In September, I think, or whatever event we were at with family.
Yep.
And he was talking about how he personally guaranteed so many different loans way back in 2008, and he got killed on them. And he's like, I will never in my life, you know, it is like Southern accent, personally guaranteed debt ever, So it's like, it kind of creates you bulletproof, because even in this market, some of the biggest developers I know here in Boston are losing their shirt, like being foreclosed on.
Yeah.
Because they overpaid. Now the project's done and it's not.
It's over-leveraged.
It's over-leveraged, right? So there's just a million different reasons why, on the seller side and also as a buyer, why this is the answer. This is your golden ticket, guys. This is your Willy Wonka. Make sure, sure that you learn up all about it. Zach is a genius at this stuff, and it's just like it's incredible. It's incredible the win-wins that you create out of this.
You want to dive in on the next mod here and go ahead and talk about like what it actually means, what the techniques we're actually using here?
Yeah, exactly. So I know you guys are probably wondering, like, hey, how do you actually implement this? So we're gonna get into that into the next video. Stay tuned, guys.